There's a $47 billion economy operating in America right now. No banks involved. No credit cards. No digital transactions. It's called the shadow economy. And it's bigger than you think. We're not talking about illegal activity. We're talking about millions of Americans conducting billions of dollars in transactions completely outside the traditional banking system. Cash payments. Barter deals. Informal credit arrangements. Today I'm showing you how this massive parallel economy actually works. Who participates? Why they choose it. And what it means for the future of money in America. This isn't some fringe movement. According to the Federal Reserve, 18% of Americans made at least one informal payment or received informal income in the past year. That's 47 million people. Stay with me for the next 14 minutes. What you're about to learn will change how you think about money. Let's start with definitions. What exactly is the shadow economy? The shadow economy is all economic activity that happens outside official channels. No paper trail. No tax reporting. No bank records. This includes 3 categories. Category 1, cash transactions for legal goods and services. Your neighbor pays you $200 cash to mow their lawn all summer. You pay a handyman $500 cash to fix your deck. A babysitter gets paid $100 cash for weekend childcare. Legal services. Cash payment. No receipt. No taxes reported. Category 2, barter and trade. A mechanic fixes your car. You redesign their website. No money changes hands. Both parties get value. Category 3, informal lending and credit. You lend your brother $2,000 for car repairs. He pays you back over 6 months. No contract. No interest. Just trust. Here's the scale. The IRS estimates the shadow economy in America represents 11 to 12% of GDP. That's approximately $2.5 trillion annually. But today we're focusing on the $47 billion that flows completely outside banking infrastructure. The cash economy. The part you can actually see and participate in. So who's using the shadow economy? You might be surprised. Profile 1, immigrants and unbanked populations. According to the FDIC, 4.5% of U.S. households are completely unbanked. That's 5.9 million households. Another 18.7% are underbanked, meaning they have an account but regularly use alternative financial services. Why? High fees. Minimum balance requirements. Language barriers. Distrust of institutions. Immigration status concerns. For these families, cash isn't a choice. It's survival. Profile 2, small business owners and independent contractors. The landscaper who quotes $800 for a job but offers $650 cash. The freelance designer who prefers Venmo or cash to avoid payment processing fees. The restaurant that pays kitchen staff partially in cash to reduce payroll taxes. Are all of these arrangements legal? No. But they're extremely common. Profile 3, privacy-conscious individuals. These are people who deliberately avoid digital financial footprints. They're not hiding illegal activity. They simply don't want every transaction tracked, analyzed, and sold to advertisers. They pay cash at farmers markets. They buy used goods with cash. They avoid credit cards whenever possible. Profile 4, cost-conscious households. According to Bankrate, Americans paid $12 billion in ATM fees alone in 2023. Some people opt out entirely. They cash their paychecks at check cashing services. They pay bills with money orders. They avoid banks completely. The cost of banking pushes people into the shadow economy. Let's talk mechanics. How does a cash-based economy actually function day to day? Step 1. Accessing cash. If you don't have a bank account, you need alternative ways to convert paychecks or benefits into spendable money. Check cashing stores charge 1 to 5% of check value. A $1,000 paycheck costs $10 to $50 to cash. Expensive, but immediate access with no bank account required. Many employers now offer payroll cards. These are prepaid debit cards that receive direct deposits. Not technically a bank account, but functional for accessing wages. Step 2. Storing value. Without a bank account, where do you keep money safe? Physical cash at home. Risky. Can be stolen or lost. But maintains privacy and immediate access. Prepaid debit cards. Load cash onto cards like Green Dot or NetSpend. Offers some security. Can be used for online purchases. But comes with monthly fees. Informal savings clubs. Groups pool money together. Each member contributes weekly or monthly. Takes turns receiving the lump sum. Common in immigrant communities. Called tandas, susus, or rotating savings clubs. Step 3. Making payments. How do you pay bills without a bank account? Money orders. Available at post offices, grocery stores, convenience stores. Cost $1 to $2 each. Can be mailed to pay rent, utilities, or other bills. Bill payment services. Western Union and MoneyGram offer bill payment. Bring cash, they process the payment electronically. Costs $3 to $10 per transaction. Cash in person. Simply hand cash directly to landlords, service providers. Now let's talk about barter. The oldest form of commerce. Still thriving in 2025. Modern barter isn't just trading chickens for wheat. It's sophisticated and organized. Platform 1. Online barter networks. Websites like Buns, TradeAway, and BarterQuest connect people who want to trade goods and services. Example: you have a bike you don't use. Someone else has a laptop they're upgrading from. You trade. No money involved. Both parties get value. Platform 2. Local swap meets and trade groups. Facebook groups organized around buy nothing principles. Community swap events. Neighborhood sharing libraries. These aren't just for used goods. People trade services too. Graphic design for plumbing work. Legal advice for home repairs. Childcare for meal prep. Platform 3. Business-to-business barter. Companies like ITX and BizExchange facilitate barter between businesses. A restaurant trades meals for accounting services. A hotel trades room nights for advertising space. According to the International Reciprocal Trade Association, over 400,000 businesses in North America use organized barter exchanges. They trade over $12 billion in goods and services annually. That's $12 billion in economic activity happening without traditional money changing hands. The third pillar of the shadow economy, informal credit. Banks aren't the only source of loans. For millions of Americans, family and community provide credit more reliably than any financial institution. Type 1. Family loans. The Federal Reserve found that 23% of Americans have borrowed money from family or friends in the past year. These loans average $3,000 to $5,000. No contracts. No interest. Just trust and obligation. When your car breaks down and you need $2,000 for repairs, many people turn to family first. It's faster than bank loans. No credit check required. More flexible repayment terms. Type 2. Community lending circles. I mentioned these in the last video, but they're worth repeating here. In Latino communities, they're called tandas. In African communities, susus. In Asian communities, hui or kai. The structure is always similar. 10 to 20 people form a circle. Each contributes $100 monthly. Each month, one person receives the full pot. By the end of the cycle, everyone has contributed and received the same amount. Zero interest. No bank involvement. No credit checks. Just community trust. Type 3, merchant credit. The corner store that lets regular customers run a tab. The mechanic who says, "Pay me when you can." The landlord who accepts partial rent and trusts you'll catch up. This informal credit system processes billions of dollars annually. It operates entirely on relationships and reputation. When you can't access traditional credit, community credit fills the gap. Now for the uncomfortable truth. Most shadow economy activity exists in a legal gray zone. Let's be clear about what's legal and what's not. Legal: paying someone cash for services. Bartering goods or services. Lending money to family without interest. These transactions are perfectly legal. What's not legal: failing to report income. If you earn money, whether cash or barter, the IRS requires you to report it as taxable income. If you're paid $5,000 cash for freelance work, that's taxable income. If you barter services worth $1,000, that's taxable income. The IRS is very clear on this. Barter income must be reported at fair market value. Cash income must be reported regardless of whether you receive a 1099 form. In practice, enforcement is difficult. The IRS estimates the tax gap, the difference between taxes owed and taxes paid, at $600 billion annually. Much of that comes from unreported cash and barter income. For employers paying workers under the table, the legal risks are higher. Unpaid payroll taxes. No workers' compensation insurance. Potential wage and hour violations. If caught, penalties can be severe. I'm not encouraging tax evasion. I'm explaining reality. Millions of Americans participate in the shadow economy daily. Some report all income correctly. Many don't. The system persists because enforcement is nearly impossible at small scales. The shadow economy isn't shrinking. It's growing. Here's why. Reason 1: banking costs are increasing. Monthly maintenance fees. Overdraft fees. ATM fees. Minimum balance requirements. For low-income households, these fees can consume 5 to 10% of monthly income. The shadow economy becomes cheaper. Reason 2: privacy concerns. Every digital transaction creates data. Banks sell that data to third parties. Advertisers track your spending. Algorithms profile your behavior. Cash offers privacy. No tracking. No data collection. No algorithmic surveillance. Reason 3: economic instability. The 2008 financial crisis destroyed trust in banks. The 2020 pandemic showed how fragile the system is. Bank closures during Silicon Valley Bank's collapse reminded people that deposits aren't always safe. When institutions feel unreliable, people turn to cash and community. Reason 4: cultural preferences. For many immigrant communities, cash-based informal economies are normal. It's how their home countries operate. It's what they trust. As America becomes more diverse, these cultural practices become more visible. Reason 5: technology enables it. Apps like Venmo and Cash App blur the line between formal and informal economies. Cryptocurrency offers alternatives to traditional banking. Even as digital payment grows, the shadow economy adapts. Before you think the shadow economy is perfect, let's talk about the real risks. Risk 1: no legal protection. If you're paid cash under the table and your employer refuses to pay you, you have limited legal recourse. Informal agreements aren't enforceable contracts. If someone doesn't repay an informal loan, you can't sue effectively. You have no proof. No documentation. Risk 2, no worker protections. Cash workers typically don't receive benefits. No health insurance. No retirement contributions. No unemployment insurance. No workers' compensation if injured. You trade immediate cash for long-term security. Risk 3, financial insecurity. Cash can be stolen or lost. No FDIC insurance protects it. No fraud protection like credit cards offer. If your house burns down with $10,000 hidden inside, it's gone. Risk 4, difficulty building credit history. Shadow economy participation builds no formal financial record. When you eventually need a mortgage or car loan, you have no credit history. Lenders view you as high risk. This traps people in the cash economy even when they want to exit. Risk 5, legal consequences. If caught evading taxes, penalties can be severe. Back taxes plus interest. Potential fines. In extreme cases, criminal prosecution. The shadow economy offers freedom and flexibility. But it comes with real risks that you need to understand. So what does all this mean? The $47 billion shadow economy isn't going away. It's a response to real problems. High banking costs. Lack of access to financial services. Privacy concerns. Cultural preferences. For some people, it's survival. For others, it's choice. But for everyone involved, it represents an alternative to traditional banking. I'm not advocating for tax evasion. I'm not suggesting you hide income. But I am showing you that millions of Americans operate successfully outside the traditional financial system. Understanding how this parallel economy works gives you options. Maybe you use cash more strategically. Maybe you explore barter for certain transactions. Maybe you build stronger community lending relationships. The key insight: banks aren't the only way to handle money. Alternatives exist. They're large. They're growing. And they're hiding in plain sight. Next week, I'm covering another alternative. 10,000 Americans stopped paying rent legally. This is their secret. If you found this valuable, hit subscribe. Drop a comment telling me which part of the shadow economy you've participated in. I read every comment. Thanks for watching Vault Insights. I'll see you next week.